Well, hello there. It's Tyrone, Wealthy Investor, and today's tutorial is all about buying stocks that have the greatest long-term potential and are currently making crazy money off their divisions. Okay? So a lot of people, when they go shopping for stocks, if you will, in the stock market, they just want a stock that's going to kill. Now, today we're going to talk about a stock that's done very well. And of course, I'm talking about Amazon.com. Take a look at the 5-year chart. Just explosive growth. So 5 years ago, you'll see back in 2015, the shares were trading for around $445. Now, if you look at the stock's performance over a 5-year period, it clearly has its share of volatility. And basically that means that you can see these peaks and then a drop, and then a peak and then a serious drop, and then another peak, a drop, a peak, a drop. This is part of what goes on with a company like Amazon, not because of the company, but because how Wall Street traders actually trade the stock. We see that the stock hit an all-time high of $2,134. Pretty explosive. Anytime you can buy something for $400 a share, and within 5 years it's at $2,100, that is explosive growth. But as I always say to you, don't buy the stock if you don't understand the story. So let's just look at what's really quickly driving Amazon's growth to go from $400, which you're seeing with your own eyes, all the way up over a 5-year period. In the Wealthy Investor Program, we do things over a 5-year period to $2,100 a share. Well, what's driving that growth is that Amazon in 2019 reported $280 billion in annual revenue. Now, that's up 22% from the year over year. And we know that earnings drive stocks. What else is driving Amazon's stock price was Amazon's web services, which is seeing explosive growth to the tune of $9.2 billion. Never buy the stock if you don't understand the story. And finally, it's Amazon Prime. Amazon Prime has over 150 million members. Now, we've seen stocks like Amazon have explosive growth on the revenue side, but not always on the share side. So the final thing that I really want you to remember is Wall Street has to like the stock. And in this case, with the stock price rising this rapidly, although the revenue is there, Wall Street loves the stock. Now, one other piece of advice I want to give you on Amazon, if you want to go out and buy the shares right now, you had better love volatility. Look at this drop here in 2018 from $2,000 a share down to what? $1,400 a share. Why do we continuously keep getting this drop in Amazon stock? Because it is heavily traded by Wall Street institutions. And when Wall Street institutions like a stock, they go out and buy 2, 3, 4, 5 million shares, and they ride this wave that you are seeing. So the stock is volatile because institutions like to jump in and out of it. So if you're going to pick up some Amazon shares, is it a high likelihood the revenues are going to be higher in the future? Yes, because the company guided higher for 2020 and beyond. So fasten your seatbelts, enjoy the ride. But it does look like Amazon, because of its who it is, and because of its Prime product and its web services, that this stock is actually going higher. It's all about having that financial education. Make sure you download my free ebook at thewealthyinvestor.net if you really are into the stock market game and want to play it and be successful at the highest level. I'll talk to you soon.